How is Chipotle doing during this pandemic? Is Chipotle a stock to buy right now? In today's video, I will be analyzing this stock, their business and fundamentals, explaining how they were able to grow and how they've been doing in the past years. And as always guys, I will give you my opinion at the end of the video and if I would buy it or not. Hello guys, welcome to my channel. If you're new to my channel and find any value in my videos, then don't forget to subscribe, smash the like button for the YouTube algorithm and follow me on my Instagram. As all of you already may know, Chipotle is a restaurant chain that operates in the fast casual segment in the restaurant industry. Chipotle was founded in 1993 and they became profitable within months. And in 1996, they already had 3 restaurants. This caught McDonald's attention and they decided to invest in Chipotle in 1998, which it converted McDonald's into the majority stakeholder. This helped the burger chain to diversify their business at the moment. The investment from McDonald's was what actually helped Chipotle to expand across the United States by converting it into a franchise. The thing is that Chipotle actually didn't want to convert it into a franchise business since that meant to hand over some of their profits, but pressure from McDonald's led them to franchise few restaurants to several McDonald's franchisees in 2002. By 2006, Chipotle went public and by the end of that same year, McDonald's have already sold his stake, letting Chipotle to take control back of their restaurants, deleting the franchise model. Nowadays, Chipotle operates all available restaurants. The thing I like the most about this company is their ability to grow and open new restaurants, which they have been very successful in the past years. In 2009, they had 956 stores, and as of today, they have a total of 2,638 restaurants worldwide and another 49 restaurants under construction. To put things into perspective, McDonald's operates approximately 39,000 stores around the world. This means that Chipotle still have a lot of room to grow national and internationally, since they only have 39 international restaurants and have a lot of possibility to tap into new markets. But as always, not every business is perfect. They have been through a lot in the past 5 years, since in 2015, a bunch of people at 7 different states got sick from E. coli bacteria. The thing is that this was covered by the media worldwide, which made it even worse for the company, creating very bad image for them. Since after that, every little thing that happened on any of the restaurants, the media would use it as an excuse to talk about what happened in the past. E. coli outbreak on Chipotle was actually the tip of the iceberg, because that same year they have already been linked with NoroVirus and Salmonella incidents in their restaurants, all in the same exact year, which obviously led to a plunge in their sales and their stock. In 2016, next year, their revenue went down 13% and their net income down 95% because of the E. coli outbreak. They lost their customers and Wall Street trust during those times, making it even harder for them to come back up to where they used to be. Then, in 2017, more than 130 people reported having norovirus-like symptoms again after eating on Chipotle in Virginia. In 2018, their founder Steve Ells decided to step down and a new CEO called Brian Niccol came in to help the company with all his Taco Bell experience, as well as the new Chief Marketing Officer and the VP in Digital Marketing. Nowadays, they are improving their technology innovations such as digital ordering platforms or digital order pickup lanes, or the Chipotle lanes, how they like to call it, delivery and also catering. These innovations give their customers a lot of options to engage with Chipotle, and that will help them attract even more customers. On March of 2019, they came up with a loyalty program which made people get more involved with Chipotle's app. At this moment, there are 11.5 million members enrolled. Their idea with this loyalty program was to be able to learn more about their clients by collecting data and then creating a strategy according to what each customer wants. Now, let's analyze their financials. As you can see, Chipotle is a growth company that despite their bad times, they have still been able to have an exponential growth in their revenue. Chipotle already reported Q1 earnings on April 21st. Their revenue increased 7.8% to $1.4 billion in comparison to last year's Q1. Something that really caught my attention was that their digital sales increased 81%, which accounted to 26% of their total sales for the quarter, implying that customer spending habits has switched to online and food delivery services, showing that Chipotle has figured out how to stand out during this pandemic. they announced a successful national delivery partnership with Uber Eats. Now they are offering delivery service through Postmates, Uber Eats, and Grubhub, which will increase their accessibility to new clients. But at the same time, this will increase their costs since these third-party delivery companies charge a rate between 20 to 30% of their sales, squeezing even more Chipotle's profit margin. Also, they show that their average annual restaurant sales have been increasing exponentially. Last year alone, they had an increase of 11% after having an increase of only 4% on 2018. Their net income decreased 13.3% from $88 billion to $76 billion in comparison of first quarter of 2019. Something that I want to highlight is their healthy balance sheet. They have a current asset to liability ratio of 1.6, which is amazing. Remember that to calculate that ratio, you need to divide their current assets by their current liabilities. A 1.6 current asset to liability ratio tells me that they are more than able to generate enough cash to pay off all its short-term liabilities when they are due. Now, it's also important to know that this company actually does not have any long or short-term debt, and that is something investors love about Chipotle because they can manage their cash more freely and gives them room to expand. Due to the pandemic, in mid to end of March, same-store sales began to decline around 34%. Then at the beginning of April, down 30%, and right now same-store sales are down in the high teens, which is like 17 to 19%. This tells me that they are slowly coming back up to their normal operations. Analysts are expecting a decrease in their revenue for quarter 2 of 2020 of 11%. A 0% growth at the end of this fiscal year, but then an increase of approximately 16% for the whole year of 2021. They are actually not expecting them to be profitable next quarter and have a loss per share of 48 cents. But personally, I don't see Chipotle having a loss per share next quarter since, as they already reported, their same-store sales are little by little coming back to normal. And if the economy actually reopens in May, this will boost their sales. Currently, they have a PE of around 74, with a 5-year average PE of 90.37 and a market cap of $24.56 billion. Taking into consideration their 5-year average PE, their stock has traded at a higher valuation in the past. As always, you have to be aware of the risks that involves investing in any company, and Chipotle is no different. Obviously, as every other industry, brand, or business, Chipotle results in the coming quarter are likely to be impacted by the outbreak, since they have about 100 restaurants temporarily closed, which are mainly inside malls or shopping centers in the US, and 17 more in Europe. Also, their labor costs will be affected because the CEO offered a 10% increase in salary to their hourly workers as a thank you for serving customers during this pandemic. The company is still trying to really hard to connect with customers and retrieve their trust and loyalty, which currently is hurting their profitability since they have to invest a lot of money on new design, marketing, and food safety practice implementations, which results in higher labor costs. The implementation of food safety is one of the most important things at the moment, even if they are hurting their profitability. Because if any other virus appear in any of the restaurants, the media will take over and it will damage their image even more, making it even harder than already is to maintain their clients. It's important to know that this industry is highly competitive, which makes it even harder for any casual fast food restaurants like Chipotle to increase their prices. They have to maintain their prices according to what their competition has so they can be able to attract more clients. An important fact is that Chipotle leases all of their locations. These lease expenses increase every year. Every investor has to expect Chipotle sales to grow at a faster pace than their leases expenses. I'm saying this because this can cause a negative effect in their operating margin, which has already decreased to 18% from 21% in the year-ago quarter. In my opinion, Chipotle at the moment is very overvalued and I'm not planning to buy it anytime soon, but I still believe that they as a company are amazing. They are growing exponentially and their CEO is making a great job to recover people's and investors' trust after everything they've been through. Also, they don't have any long or short-term debt, which makes it easier for them to invest in their future projects. I give them 5 over 10 points because I think that a lot of their coming growth is already priced in. As always, guys, remember I'm not a financial advisor. All of this is for education and entertainment purposes, so do your due diligence before investing in anything. That was all for this video, guys. Hope you really enjoyed it. Thank you for watching. Don't forget to subscribe, smash the like button for the YouTube algorithm. Follow me on my Instagram. Stay safe, stay home. Thank you, and see you next time.